Hi girls, so let's see the next illustration, that is illustration number 8 in chapter 4. So let me read the details of this particular problem. So this is yet another problem on the calculation of input tax credit. Let's go in details with the question. From the following information, Yes and Company for the month of July 2021 purchases of raw material A from a supplier in Mysore rupees 50,000 at 5% GST. Purchases of raw material B from Kerala rupees 2,50,000 at 12% GST. Sales of SN Company for the month of July 2021 are as follows. Sales 1,50,000 within the state at 18% GST and sales 1,50,000 within the state at 12% GST. Compute the eligible input tax credit and GST payable for the month of July 2021. So this is the question for you. Now let's go about solving this problem, girls. So I've written down the solution in the notebook for explanation. So first of all, as usual, in order to arrive at the net GST payable, you have to find out the output tax payable. So from the output tax payable, you have to reduce or minus the input tax credit eligibility, wherein you have to set it off so that you arrive at whatever is the net GST that which is payable. So as far as this problem is concerned, okay, so you have all the three, that is CGST, SGST and IGST. So what is that he has done in this problem specifically is he has taken the input tax credit that which is availed on IGST and set it off on CGST and SGST. So let's see how to go about this calculation. So first of all, you need to calculate your output tax payable. So what are the details that which is given with regards to output tax payable in the question is, so here it is very clear that sales of rupees 1,50,000 within the state of 18% and sales 1,50,000 within the state 12%. So both these are within the state, okay, it is intrastate transaction. So there is no any out of the state sale, okay, as such which is made a mention. So let's see now how to calculate this output tax payable. So here it is clearly given that it is 18% and 12%. So when we are calculating the same, it has to be divided between both CGST and SGST. So first of all, there are two sales that which is made. So one is your sales within the state of 1,50,000, 18% GST, and sales within the state 1,50,000 again but 12% GST. So in order to calculate the output tax payable, it will be sales within the state, it will be 1,50,000 into 18%, which will be divided into exactly half for both CGST and SGST. So 18% into 1 by 2, that will be 9% and 9%. So 13,500 and 13,500 will be the output tax payable as far as this particular sale is concerned. Yes, there is yet another sale that which is made, sales within the state, and that is again for 1,50,000, which is for 12% GST. Again, it has to be divided between both CGST and SGST. So it is 6% and 6%. I have multiplied this into 1 by 2. So it's going to be 9,000 and 9,000. Alright, so we are getting an output tax payable as for CGST as 22,500 and SGST as 22,500. So we have arrived at what is called as total A. Okay, so now let's see the input tax credit calculation. So input tax credit calculation will be based on the purchases that which is made. So talking about the purchases, if you see here, purchases of raw material A from a supplier in Mysore rupees 50,000 at 5% GST. And again, purchases of raw material B from Kerala, this is out of the state, it will become IGST and it will be 2,50,000 at 12% GST. So let's calculate the same way. Purchases of raw material A that was within the state, so that was 50,000 into 2.5% and 2.5%. It will be equally distributed among CGST and SGST, 1,250, 1,250. While the purchases of raw material B was outside the state, okay, so it will go to IGST column. So therefore the total percentage has to be considered wholly as its IGST. So 2,50,000 into 12 divided by 100. So that will give you 30,000. So you don't have an output tax payable in IGST, but you have an input tax credit with IGST. So therefore, whenever you are setting off your taxes, okay, you have to set it off according to the hierarchy that I told you. First you will pay for IGST, then you will pay for SGST, and then CGST. So you can see that there is no IGST output tax payable as such. So therefore you can set it off accordingly. But then this is you have to first arrive at something called as total B, wherein you are going to minus from this output tax payable the input tax credit and arrive at the total, okay, total tax. All right, so 22,500, which will be total A, minus total B, that is 1,02,000, sorry, 1,250. So that means output tax payable minus input tax payable, you will arrive at what is called as the tax payable. So similarly here also 22,500 minus 1,250, 21,250. Here you don't have anything to minus, so you will get back the 30,000 as it is down. Alright, so now let us see how to set off this input tax credits. Okay, so you have an input tax credit of 30,000, where this 30,000 is available on IGST, but there is nothing to set off. There is no output tax or anything as such needed to set off here. There is no input tax credit here, so therefore you are taking this into consideration in order to set off CGST and SGST. So first of all, you take this thing and you set it or set off 1250 21,250 fully, okay, and then you are left out from 30,000 the remaining amount 8,750, okay. So that you're going to set off here and you're going to get a balance of 12,500. All right, so here there is nothing as such. This entire input tax credit is utilized, so 12,500 rupees is the net tax that which is payable. All right, so if you have any doubts in this problem, you can always clarify. The illustration question is there very much in page number 164 in your textbook, and it's illustration number 8. So you can go through the question as well as you can go through this particular solution. Thank you, girls.